You ever pulled up a stock page and thought like, what is this? Like, what am I supposed to do with this? It's a bunch of numbers, letters, and little charts, and you're really just trying to figure out like, am I about to make a big mistake or will this be a smart move? If that's ever been you, this is your video. We are going to talk about and I will walk you through how to read a basic stock page, how to look up a stock and read it and learn. We'll be using Yahoo Finance today. So the next time you see one, you'll actually know what you're looking at. Let's talk about it. Hey goalies, welcome back to the channel. If this is your first time here, I'm Nia, the Coins Confidant, and this is the channel where we keep it real about all things money, confidence, and finance. I think that it's important for you to know that my job here is to help you build the confidence and clarity to crush your money goals. Now, I do need a favor from you. Please hit that like and subscribe button. Tell me if you have questions. Drop down any comments. What thoughts did you have while you were watching this video? Okay, so the first thing I guess that's the first thing that I need you to do, because that helps show YouTube and let them know that you actually want to hear what I'm talking about, because that's important. And then it helps me because it pushes my video out to more people, because it's like, oh, well, they like what she had to say. Maybe somebody else will too. Now, my thing I have to tell you is that this is not investment advice. This is for educational purposes. My goal is to help educate you and help you learn exactly how to do these things, because in order for you to achieve wealth, you're going to need to invest. So it's important for you to start getting familiar and help learning what these things look like. All right. So let's pull up Yahoo Finance. That's the first thing we're going to need to do. And then I will walk you through like the key parts of a stock summary. And we're going to use a company. We're going to use Hershey. Okay. We're going to use company Hershey, and their ticker is HSY. Now, if you don't know what a ticker is, we're going to go through it, but I also have a video in this series that is all about investing terms to help you. Okay, so I'm going to share my screen right now, and then I'll put the stock page in the front for you to see. Okay, so let me make sure it's the front screen so you can see. And then what you want to do is, as I talk about the different parts of the page, I want you to look at them, find them, pause the video if you need to pause the video. That's your prerogative. We're going to draw past that ad. So we're going to start here, okay, in this open space. And just, even if you need to right now, let's just pause the video and just look around, get familiar with the layout of this page, get familiar with the different things on here. If you have questions about what something is, feel free to drop that in the chat, and I will, I will reply to your comment and explain. But that's the first thing right there. Take your time to just get familiar. Use your mouse, hover over my portfolio. To see, if you hover over this, you see it says my watch list. Wow, what's a watch list? A watch list is for you to get certain stocks that you want to watch, where you'll be able to follow their patterns, whether the price went up, or rather the value went up or the value went down. You'll be able to watch these specific stocks. And so that means that when you come back to look, you won't have to type in their ticker, because you'll have the different set of tickers saved. Okay. So you got news, see all those options they have on news, see how it gets down into industry specific news. That's very important if you're looking at stocks and researching. Look, markets, it's telling you about the different types of markets. You see what I'm saying? Just get familiar with the page first. See, they have blog articles. So I've actually been quoted in Yahoo Finance before. So one of these blog articles I'm in, I don't remember the title of the specific articles, but I know for a fact I've been quoted in Yahoo Finance before. But get familiar with the page, okay? Look through it. Go down the sides. What are these things? What do they mean? play around with them. Okay. So the first thing you want to do is you're going to go to finance.yahoo.com, of course, if you're not already there. And then you're going to type in HSY in this top box at the top. And then you'll press the green magnifying glass. Yes, you'll press the green magnifying glass. So once you do that, it's going to pull up something similar to what I have here. And as you can see, as I go to any specific point, it gives me the analyst rating, like so much information that it gives you. So I understand why sometimes for people who are not familiar with investing or don't understand it, sometimes they get a little overwhelmed when they reach this part, because it's like, oh my God, it's all these things. I don't know what they are. What does this mean? What does that mean? That's why I want you to first just take the time and moment to familiarize yourself. I don't want to jump into explaining what things mean and you haven't taken the opportunity to get the lay of the page. That's very important. Pause the video if you need to, look around, see what's there, and then we'll get into today's session. So I'm going to go ahead and get into it because you have the ability to pause, and I want to be able to keep it going for those who are like, okay, girl, come on, drop these gems. I'm waiting. Okay, so at the very top, you'll see the company name, the ticker symbol. And so for us, HSY for Hershey, okay? Basically, the ticker symbol is pretty much shorthand for the version of the stock name that makes it easier for it to track. So it's kind of like, I would say, the stock's nickname. And so I made a video that basically breaks a lot of that down and tells you the different terms, but I'll break those things down that are needed for today's activity. So right underneath that, you're going to see the current price. So if you see that on here, you see the current price as that's basically the price that the stock is right now. So if you buy one share of that stock right now, that's the current price. But that price changes all day while the market is open. Okay, so we talked about it in this series. The market is open Monday through Friday. So if say today is a Saturday, this is the price right now. It's not going to change. You'll see the change in the price and you'll see the percentages that it's up or down for this day. And so that's typically going to display right next to it. So as you see right here, you got plus 2.36. This is telling you the change in the price. Obviously, red means it went down. Green means it went up. Now you see this says after hours. Okay, April 17th, 7:51 Eastern time. This says at close. At close refers to when the market closed. Okay, so we okay. Okay, obviously, like I said, red means it dropped. Green means it went up. So don't let the color swing get to your emotions. That's one of the first things I want to tell you about when you're looking at this information. Just because it went down for that day does not mean, oh my God, I lost all my money, panic. It's just referring to that day. Sometimes it might have went down that day, but if you look at it over a 5-year or 1 year or a 10-year period, overall it went up. Everybody has a bad day, So don't let it get to your emotions. Stocks move up and down all the time. Okay, so scroll down a little and then you're going to see a box with a bunch of details. This is the information that you want to know. Okay, so scroll down, you see it. This information you want to know. So this is what I'm going to break it down. So previous close, the at close, this was, like I said, that was the price of the stock when the market closed, which was, today is Saturday that I'm recording this video. So this was as of Friday. Okay, that's the price that it was when it closed. Open, this is where the stock would have started today. So let's say today was a Monday, it would say open. It would show you the price that the stock started at today. Bid and ask, these are the prices buyers and sellers are offering like in real time right now. So let's just say you're a long-term investor. You can honestly skip these for right now because that is more so for like day traders, I would say. So days range, this is just showing you how high or low the stock has gone today. Okay, and then you have the 52-week range. This is the one that I think is more important because it's going to tell you the highest and lowest prices that the stock has hit in the last year. So think of it like, I would say maybe the stock's comfort zone. So it gives you an idea of just about how shaky or volatile or stable this specific stock has been for this year, which is important. We've had a very interesting year. So if this stock was able to remain stable without all the things that has happened within a year, I think that's a good sign. And okay, maybe I need to look further. I need to get a little bit more information. Now, volume. This is going to tell you how many shares were traded today. So if it's high, that means a lot of activity. That means a lot of people have been trading this stock. If it's low, that means it's a little quiet. The stock is not getting traded a lot today. Okay, remember this information reflects today. Then you have your average value. This is going to be the average trading activity. So this is the volume of trading that has happened on the average for this stock. And so if the current value, keep saying value, if the current volume is way higher than the average, then that means something big might be happening. It might be something in the news. It might be something with earnings, announcements, just different information. Okay. Now, market cap. A market cap is really short for market capitalization. So this is telling you the total value of all of the company's stock combined. So let's just say you wanted to buy all the stock and you want to, take control and take power of the whole company. In plain terms, if the company was to sell today and you were to buy it, this is how much you would have to pay. Okay. Now, beta. This measures how much the stock moves compared to the stock market overall. So a beta of 1, that's going to mean that it's moving along with the market. You know what I mean? It's moving the market. Now, if it's above 1, that means it's a lot more risky. It's more volatile. And if it's below 1, that means it's more stable. It's much more stable and it doesn't move as much. Okay. Now, PE ratio TTM. This is the price to earnings. So PE ratio, price to earnings ratio. This is going to tell you exactly how much you're going to pay for each dollar of the company's earnings. So let's just say if this number is high, that might mean that the stock is expensive or the investors are expecting for this stock to grow. Okay. Now, EPS TTM. That stands for earnings per share. EPS, earnings per share. This is the company's profit and it's dividing it by the number of shares. Okay. So let's just say if they had $100,000 profit and they have 75 shares, you divide that 100,000 by 75. If the number you get for the EPS is higher, that generally means that the company is more profitable. Okay. Now, earnings date. This is when the company is scheduled to release their next earnings report. Companies have a requirement when they are publicly traded. So like if they're traded on the stock market, they have a requirement, responsibility, whichever word you want to use, to report their earnings. Like this is when you see the things happening and it's like, oh, this company was in the news because they wrongfully reported their earnings. That means that they reported their earnings that they were supposed to, but they fuddled the numbers because they didn't want it to be known that they were in financial distress. So that's why it's important to look at this information. Stocks can move a lot of earnings days. Stocks can move a lot on earnings days. So it's just good to know and be aware and know exactly what's going on. Moving along. Forward dividend and yield. This is going to tell you if the company pays dividends. Now, depending on what your investment strategy is, if you pick a stock that gives dividends, or maybe you like to invest in stocks that pay dividends, this is going to be important information for you, okay? It shows how much per share and what percentage return that they would give you based on the current stock price. So this is important for someone who has dividend stocks as a part of their investment strategy, okay? Now, you might be wondering like, okay, Nia, I get the terms. This all sounds beautiful. Like, thank you so much for explaining this to me. But what if I lose all my money? Well, let's talk about it. And I'm going to come back on the screen so that I can break this down a little bit better for you. Yes, you might lose your money. Like I came all the way on the screen to tell you, yes, it is possible that you might lose your money. That's a part of it. When you are investing, you are taking a risk, and sometimes you might lose. If you put your entire savings into one company and that company crashes, then that money could be gone. That's the risk of putting all your eggs in one basket. That's why we talked about in the terms video. And again, I can't stress enough, if you haven't seen it, make sure you go look at the investing terms video that's in this playlist, because diversification is important. Investment is taking a risk, but investment is taking a calculated risk. Like, that's why I'm going through these videos, so I can break down these things for you and help you understand a lot of these terms. And I'm putting them in separate videos, so it's not like this 30-minute video that just has all these terms like dry eye. I'm trying to help and make sure that I break things down to give you an understanding. If it's something I explained that you don't quite understand, please feel free to drop it in the comments. Hey, you all are giving me video ideas, so keep them coming. Let's go. But that's the reason why we diversify. We diversify because you're limiting your risk. You're minimizing your risk by spreading your money around. Okay, so that's one of the reasons we look at index funds and ETFs. If you remember that from my video, see, your girl was not leading you astray. I am here to help you and help you understand this and get past the fear of investing. When you focus on long-term investing, you're not chasing quick wins. So what something does for one day is not as important to you as to what it has done over the long haul or over its entire reputation, how it has behaved, how volatile it's been, how much growth it has had. When you are investing for the long term, you look at things different from a different perspective. Shameless plug. But listen, just because the stock goes down, also, I think it's important for you to know that does not mean like it's a bad investment. It doesn't mean that, oh my God, this stock went down today, all my money is gone. It just went down that one day. Stocks move. Markets dip. Markets go up, they go down. You have market corrections, which is basically those things that happen. And it's normal, okay? It's normal. It's completely normal for that to happen. It's with any risk that you take. You're taking a risk. And unfortunately, that's one of the ways for you to be able to level up and build wealth. Bigger the risk, the bigger the reward. I'm sure you've heard. But that's why I'm educating you, so that the risks that you are taking are calculated risks. Because there's a difference in you just taking a risk without any back knowledge and you taking an educated and calculated risk. Okay, your job is not to beat the market. Like, that's not what you're here for. That's not what you need to learn to invest to do. Your job is to stay in the game, to make smart money moves so that you can invest over the long term and increase your wealth, increase your income, let your money do some work with you, for you, all of the things. So that's what your goal is. And when you put that in perspective, you start to care less about, oh, you having to beat, or oh, it went down today, or because that's not going to bother you and be as important to you. You know what I'm saying? So the way that you do that and you invest for the long term is by staying consistent. I know sometimes it's hard, but you have to learn to start to remove the emotions. Remove the emotions out of it. Investing is a long game, okay? And honestly, when you understand what you're looking at, it just becomes a lot more scary. So I do want to remind you that you don't need to be perfect. You're going to hear me say this about 57,000 times because I think it's important, and I think we all need the reminder sometimes. You don't need to know everything. You don't need to be a master of all trades. You just need to keep learning and start applying what you know. Start putting in action. That's the important thing. So if this helped you, or you feel a little less stressed, a little less lost, drop a comment below. Let me know. Please let me know if these videos are helping you. And if you're ready for more guidance, I have a full playlist. It's called From Clueless to Confidant, and it's all about investing. And it starts out breaking down definitions. It talks about what is investing, different types of investment. Like, I'm bringing all the information and gems to help you. And of course, if you feel like you need additional guidance, feel free to book a free consultation. The link will be in the description, as well as the link to the playlist will be in the description. Okay. And then make sure you check out the next video in the series, which is going to be breaking down stocks, index funds, ETFs, but breaking them down so you can figure out like what investment vehicle might be better for you and which one is actually going to work for you based on what your goals are and what investment strategy you want to adopt. Okay. So until next time, keep showing up for yourself and keep crushing your money goals.